Hey guys, this is Market Update. So some good news on the Clarity Act. It's now going to a vote in the Senate in the US on the 15th of September. So some good news there. Let's see what happens. Maybe we go sideways into that for another month or so. That's fine. It's the summer. No one wants to trade here. But no intelligent trader is going to take a short position in Bitcoin now. That is a stupid trade. It's a moronic trade. Why would you short an asset at its trend rate of growth at the 200 moving average? It's just not a good risk reward trade. It's not to say it can't go low in price, but no one is going to sit here and say, I think it's a good idea to see Bitcoin in a bear market at its trend. And this thing has gone from 0 to 125K a coin in 17 years. I'm going to short it at the trend. It's just not a trade that any intelligent person is going to make. So that's why you get these sideways choppy events at the bottom of bear markets, because all of the short sellers say, look, we can't short here because it's already gone down a lot and it's at the trend. So it's not a good trade to make. And of course, buyers aren't here because buyers always step in at new all-time highs and they get excited about it. Now is the time to get excited because you get the best forward returns from cheaper prices. Look, we had a bull market, we topped out exactly the same time. We've had the bear market just like every other time, and now we're going through the sideways chop just like every other time. It's amazing, isn't it? It's like a metronome, but yes, of course it's going to keep going up in dollars. It's not very hard, and now is the time to get excited, not when we're at 100K. Make your positions now. If you want to trade Bitcoin or crypto or anything else, you can trade it on Bybit. If you're a new user to Bybit, click the link below, make a deposit, and they'll give you a deposit bonus to go ahead and trade with, all the way up to $30,000. I also think the headlines about rate hikes this year are a little bit bizarre, but we know the game, right? Which is the Fed needs to manipulate our behavior. They're not telling us anything seriously. They're not trying to tell us what they think will happen. They don't even know what will happen. What they need to do is manipulate the behavior of the market. So they're going to tell everyone, we're really hard on inflation. We need to raise interest rates. I don't think they do, though. I don't think they're going to tell us this. But if you look at inflation rates, I think they're within their acceptable boundary, and they're not going to tell us that because they're elevated. So yes, inflation is elevated. Yes, they do want elevated inflation because they have a lot of debt to the base. They're not going to tell us that. They're going to tell us they're going to raise rates. But if you look at the actual rate of inflation, core CPI expected to be around 2.5% annualized, 0.2% for the month over month. Headline is elevated, but they're really focused on core PCE anyway. And if you look at the trend here, it's not trending upwards, right? It's kind of sideways down, right? And it is elevated, yes, and they're not going to say this, but I think they actually don't mind that because they have a ton of debt to the base. So that's it. I don't see them raising interest rates. Why would they anyway? The overnight rate is already quite high. I don't think they need to raise it unless they want to destroy the economy or risk taking, but why would they want to do that, right? They're in a huge build out of AI, which is national security. So that plays into it. But if you look at the underlying economic data, it's about as good as it can be. Now, the debt on top, we know how the game is played. It will never change. Doesn't matter who's in charge. The debt always goes higher. And because they can't control the debt, because it's a debt-based system. And the debt is the currency. The currency is the debt. And if you take currency, you have to issue it with interest. So if you want to pay it off, that means you need to find more currency. But the only way that you issue the new currency is with more interest on top. And so you can never get rid of the currency. If everyone pays off their debt, there's no currency left. Now, a country's never going to just say, well, we don't have a currency anymore. It's a debt-based system. It's the easiest trade ever. This is what freaks people out about Bitcoin. It's so simple. They're like, should it be more complicated than this? No. You have a fixed supply asset, which is a monetary instrument. It has desirable characteristics. You measure the price of that thing versus a currency that does this. That's it. It's really simple. And you just buy it over time, you save in it over time, don't get wrecked with leverage or anything like that, and that's it. So federal debt goes up and up. Of course it does. It always will. Every fiat currency does this. Every single last one. And if you look at the underlying economic data, I think it's okay. Unpopular opinion, it's about as good as it can be. The real economy and the debt-based system on top is not the same thing. US productivity accelerated in the second quarter. It's okay. If you look at construction jobs, these are soaring. You know, that's good news. If you look at what's happening here, healthcare, construction, business services, information, transportation, this is good. This is a private sector. Now, what you've got is a huge reduction in government workers. Leisure, I think, is the World Cup, right? So temporary jobs. But to be fair, not every single government job is unnecessary or unproductive. There needs to be some, right? But a lot of government work is unproductive, and those people would be way more productive and increase supply in the private sector. So how do you drop inflation? Well, you increase supply of goods and services, which is disinflationary. So if these people are moving out of the government into the private sector, you can increase supply, which keeps a lid on inflationary pressures. And it's very complex, but the way that governments manipulate employment figures is to say everyone's employed. Look, it's the best economy ever. They're all employed in the government doing unproductive work. Not everyone, but a lot, right? So out of the government into private sector, that's good. That's good news. It's disinflationary, right? And so what you're looking at is inflation within the bounds that are acceptable. In my opinion, they're not going to say that. But why would they raise interest rates? Why would they stop this AI build out? I don't think they would. So I think we just carry on. The juice must keep flowing. We know that. So why does Besant step in to defend the yen? The yen is weakening versus the dollar because interest rates in Japan are too low in relation to US interest rates. So the yen weakens. But you can't have that because the whole carry trade here is go and borrow in yen at low interest rates, turn it into dollars and fund US growth. And they want that to keep happening. But if the yen is weakening, the Japanese have to sell treasuries to defend the yen. Now, if treasuries are selling off, that means the interest rate's going higher, and that just reduces the juice. You can't have this, right? So that's why Besant ends up selling euros to buy yen, try and strengthen the yen to prevent the Japanese from selling treasuries to try and manipulate rates, massage rates as low as possible, because the juice needs to flow. So that's it, right? The roundabout way of making sure that dollars always flow. And if dollars are flowing, which they do, then assets will go up valued in those dollars. It's simple as that. You need to create the dollars somewhere. They need to be created from somewhere. They will be created from somewhere. So you have a strong, desirable, scarce currency to value dollar debasement and the debasements of products and services. Why do products and services debase? That's what we do every single day, is we wake up trying to make the unit cost of things go down through productivity. And if you want to invest in that, then the industry of our age is AI, computing, robotics, space, all of that stuff. The easiest way, I think, is to just buy the NASDAQ index. You don't have to worry about it. You're going to get a broad exposure of the best companies doing all of that stuff. The simplest trade, life is very simple. Trading, investing is very simple, actually. Bitcoin and the NASDAQ index, I just don't see any reason to change from this strategy for the next 10, 15, 20 years, right? You've got this big build out of digital sound money and technology. What else? If you do trade any of that, including Bitcoin, you can trade TradFi assets on Bybit as well. Click the link in the description. You can get a deposit bonus when you sign up by that link. I'm James, this is MyZG. Cheers for watching, and I'll see you in the next one.